Hello, this is Aidan Kusainov. Welcome to one of my free markets and economic updates. So the last one was in the middle of August, where this blue line is on this hourly chart of the Nasdaq 100. Back then, I suggested that we were coming to the end of the move from the March or 2020 low. So I thought that this whole move was coming to an end, and I was looking for a rapid retracement and a decline. I did miss quite a big chunk. I did alert my subscribers just pretty much at the tip that I believe that was the final bit. And since then, unfortunately, we did not have as rapid and sort of unidirectional market move as I was expecting. In fact, sort of in the third week of September, I closed my shorts roughly around here and went briefly a little bit long and completely lost interest and kind of just the markets became, in my opinion, indecipherable roughly in the middle of October, so around here. This tells me several things: that I think major US indices are currently in a sideways consolidation to a near parabolic move off the March low. So what we've had since the early September high, since here, is a triangular consolidation. Triangles usually, within triangles, each leg is composed of three parts, and we can see that very clearly here on the Nasdaq. You have ABC, you have ABC, and this is the wave C, so there's something consistent, overlapping, meandering price action, so no impulses, and a narrowing price range. I do expect this price range to break, probably with the big catalyst, it being the US election. But it could actually stay within the range for a wee bit longer, even after the US election. So US election happens roughly around here. And in the meantime, I think prices will coil very, very tightly into this range. I expect the breakout, for there to be a breakout, so for US indices to advance higher from their triangle consolidations. So this is the Nasdaq 100. I no longer think that the move from the March low finished. I think given the nature of price action since early September, we are currently in a sideways consolidation. The fact that it's a triangle consolidation tells me a very important thing, that triangles usually are penultimate patterns. That means that the move out of the triangle is usually in the direction of the preceding trend. In this case, the preceding trend is up. So the move out of a triangle is very likely to be up, but that will be it. And that move will not be very large. So in my very brave estimation, I think that we're going to coil sort of around 11,600-700, plus or minus several hundred points, until a catalyst, could be the election, could be a little bit later than the election, and we could advance quite sharply higher into 13,000, possibly 14,000 into end of November, possibly even into Christmas. That depends, a lot will depend on exactly how we begin to break out of the triangle. Now, if we look at the big, obviously we have the Standard & Poor's. Let's look at the Standard & Poor's index. This is SPY, the S&P ETF. And here also you can see very clearly three wave constituent parts of price action since the early September high. So 1, 2, 3, 1, 2, 3, 1, 2, 3. We're not sure if this finished. We could poke down a little bit, but it's unlikely that these levels here will be taken out. This is the late September low. So broadly speaking, A, B, C, D, E, all around the 3,040 level, and then probably with the catalyst of the election or a little bit later, a move towards 3,700, possibly 3,800. Now, very interestingly, some US indices, notably the Russell, the small caps, they look very, very, very bullish. So price action since early October is clearly, in my opinion, a bull flag. That means it's a very narrow range, and we are on the cusp of a sustained move through the top of the range and possibly towards 1,700, 1,750. That's a move of about 10%. Constituent parts of S&P 500, obviously the largest sector currently is technology. It's a winner-take-all market. That looks pretty much like the Nasdaq 100. Even more triangular though, so price action since the early September high is very much consolidating. ABC, ABC, something maybe C probably. I expect a move higher of about 3-4%, then probably a little decline of 2%, and then a sustained move up over 135. That's about 12 to 18, possibly 20% move higher. XLC, that's the communication services ETF, that's things like Google and Facebook. Very clear triangle here since the early September high, meandering, overlapping three-wave constituent parts, ABC, 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 something here. Very clearly narrowing price range, poised for a breakout. I think we're going towards 67, 68. That's a move of about 10 to 12%. XLV, healthcare, quite a large sector as well, third largest currently. Again, sort of this is not immediately bearish. In fact, you could say it's an inverted head and shoulders. This is left shoulder, head, right shoulder, and we're ready and poised for a move higher. And finally, XLF, the beleaguered banks and financials. Very, very clear in my opinion here that we have a little ABC. I'm expecting a move higher. Now, banks have been in a big consolidation for much longer. They've been in a big consolidation since June highs, also in three waves. So ABC, 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 and here. And this consolidation is nearly over. I do expect banks to advance quite strongly higher by 20, 40%, well 20, 25% to about 28, possibly 29 into Christmas. That is a big move. So banks, I think, will outperform all other sectors. So another thing we have, or I find of interest currently, is gold and silver. Gold and silver have been in very, very tight coiling ranges since their August or summer highs. I think they were in August, yes. Now, gold, the move began at the March low, the COVID low, the sort of panic March low. We have waves 1, 2, very clear wave 3, and very clear consolidation. This is definitely a consolidation. I do not think this is the start of a decline. Obviously, I will be wrong if we close sort of below 1,800. Chances of that, in my opinion, are quite slim. So we have an A, B, and a C. Some really, really meandering, very, very tightly wound market. I think if we begin to break up, we will see a sustained move of 10 to 15%. Very similarly on silver. Silver is even clearer. It's a very clear market. I was looking in sort of a couple of weeks ago, this for my subscribers, for a decline lower. We've only had a little pithy little decline there. So by this stage, I think the energy is no longer there. The market has consolidated in time, not in price, and we are very much ready to begin advancing. Even if there is a washout, I'd be a buyer around current levels. So we probably have wave 1 up to here, 3. This has been a 4 in a triangle A, B, C, D, E, and we're ready to begin advancing in wave 5. So I can see that the story comes together very well. There's going to be some sort of a reflation or reflationary expectations, possibly to do with a democratic sweep or a massive stimulus response in the US to the COVID pandemic, which will raise inflationary expectations. So gold and silver will rise, and of course equities will benefit too. Now, quite interestingly, and this is a bit longer term as far as the forecast goes. So this is the US Treasury 10-year. I think generally we are pushing towards the bottom of the range in yields, top of the range in price. There is some leeway, I'd say 30, 40 basis points. We could go towards 0 for the US 10-year, but all of that will be temporary. I think foundations are being laid for a sustained decline in US Treasury prices and an advance in yields. I think that will take place over the next 5 to 7 years. I expect that following a spike higher in US Treasury prices, there is going to be a sustained repricing of inflationary expectations. So for now, that is all from me. If you wish to regularly hear from me, do inquire about a subscription service. It's available on a weekly and monthly basis. Thank you very much for listening. That was a